Let me bring in Nitin, CEO and Managing Director at Motilal Oswal Asset Management Company. They're launching Motilal Oswal Midcap 100 ETF now, after the Nifty product that they launched some time back. Nitin, good morning. Welcome to the show. Prashant here. Could you talk about that? Open for subscription on the 12th?
Sure. Yes, thanks. The product that we launched is India's first mid-cap ETF. So far, the only way investors could access the mid-cap segment was either by buying into individual stocks or by buying into actively managed mid-cap funds. This is again our attempt to open up the segment using an index-based ETF approach, and the index that we've chosen to track is the CNX Midcap Index. So most shares, M100 as the product is called, effectively will give you the price returns as reflected by the CNX Midcap Index. It's a pure passive tracking fund that will track the index on an ongoing basis. And I think we're excited because for the investors, it's access into the segment which provides them a fairly inexpensive, efficient and transparent mechanism to take exposure to the mid-caps versus buying individual stocks which obviously have a higher element of risk, or buying into active funds which have their own sets of issues in terms of performance and consistency.
How do you assess the response right now, Nitin, to this one?
Well, it's early days. We've just started to do our pan-India roadshows, and we've had some sessions with investors, and I think the excitement comes from the fact that the power of the idea is in the simplicity, and people like the fact that they will now have an alternative mechanism to access the mid-caps, just like they have on the large cap side. It's very easy to go by the market, as we call it in the large cap space, by using Nifty futures or Nifty ETFs or even our initial most shares M50 ETF. But when it comes to mid-caps, there was just no way to just go by the mid-caps, and I think this is giving them an opportunity to use that as an exposure device. So I think still early days, but we think it's going to be a fairly well accepted NFO from almost every segment of the market, retail, HNI, institutional.
Morning, Nitin. Manvi also joining in. This is a qualitative question, essentially based on your interaction so far, and I know you said the early days. Is it a slightly harder sell with the mid-caps? Is there a slight wariness right now?
I think timing-wise, you're right. It's obviously there's a little bit of nervousness in the market. We've seen a fair amount of press as well as general declines, and there have been more declining days than anything else over the last 10-12 days. So clearly there's a little bit of nervousness in the market on the timing. But we are not really pushing this product from the point of view of timing the market. Our whole approach or the value proposition here is the fact that you have an efficient and transparent and flexible way to access the mid-cap segment. And yes, we'd like people to make allocations from their existing holdings. So if someone's buying 5, 7, 8 mid-cap stocks, we would expect that this will be a better exposure for them than buying those individual stocks. And hence the name of the game is an asset allocation play rather than a timing play. So I think from that point of view, there is a little bit of nervousness on the timing, but I think the allocation story is actually very, very good in terms of using this for allocation for mid-caps.
Nitin, why do you think other players have not launched a product like this so far in the market? Why have others sort of shied away?
Right. I think we got the same question in our first ETF launch because that itself was also a fairly innovative segment product. So there is really no right or wrong answer to that. My sense is people really thought that mid-cap is a small segment of the market, or people are more interested in mid-cap stocks, or maybe they had concerns around liquidity of the segment from an index point of view. But obviously we don't think any of those are serious issues, and we genuinely think there is a pretty big appetite for an asset allocation play on the mid-cap segment. So we've gone ahead and opened up a new segment for the first time.
Okay, all right. Fair enough. Let's move on to where do you think the market is headed now in the near term, Nitin? How much more downside, or you think we made some sort of a short-term bottom?
I think it's very hard to call whether we made a bottom. I think at this point in time, there are more headwinds and there are more uncertainties that the market needs to deal with. Not the very least of them being macro issues like inflation and interest rate. And then we obviously have the ongoing result season that got kicked off yesterday, and the initial response from the market wasn't very fruitful to that either, even though the results were pretty much in line, at least for the frontliners. But I think the expectation was there's really very little margin of error from an earnings point of view right now. So my sense is the next few weeks will actually be a little tough for the market. That doesn't mean that we will keep declining. All that means is that the volatility will actually be high, and investors need to brace for that volatility. and sit through that period. We've had a fairly good run over the last 18, 19 months, and I think now is the time to just take a breather, sit tight, wait for the volatility to kind of subside. I don't see too much downside in the market in terms of the overall prices, but I think volatility is really what's going to test our patience. Even if you look at earnings for FY12 having to go through a little bit of revision on the downside, or even if the multiples compress from here, we're really looking at no more than 5-7% scope from that point of view either. So I think it's really market's going to stay locked in this range, 55, 57 at the bottom on Nifty and maybe 6,000, 6,200 at the top. But that's a fairly wide 10-odd% range, and hence that's what's scaring the people right now.